Okay, so let's see. We got Alex. Alex, you there?
I'm there. Hi, Jack. Can you hear me okay?
Perfect. And we
Okay.
got a special guest, Matt.
How you doing, Jack? Good
Matt,
to see you, Alex.
fantastic.
Hi,
How are
Matt.
you? Okay, let me see. I want to see if we can get because we got three. I want to see how we can the setup here. What's okay? This is better, no?
That looks good to me.
Yeah. Good. Wow. Okay. Well, you guys have a lot of books. This is your you guys want to read a very intelligent, well-read group here.
Yeah. Don't focus on what's on the shelf, but focus on us.
Excellent. So for everybody just joining in, this is the Wall Street Reporter Next Superstock live stream, and again, we're looking for those stocks which have 10x to 100x upside potential. Back with us is Cross River Ventures CRVC Alex Clement, and he's actually joined by Matt Badali, a special guest today. Matt is by training a geologist.
Yes, I was my education's geology, but I spent the last 15 years writing about natural resource investing.
Okay, and you have the what is it, the Rocks and Money podcast?
Rocks and Money podcast, and I have a little blog at mattbadiali.net where I continue to write about natural resource investing, gold, oil, and all that stuff.
Okay, it's Conscientious Investor.
That's the name of the blog, The Conscientious Investor. That's right.
Okay, perfect. So the reason I guess Matt, you're here. I'm going to see if we can do this a little bit. I'm going to see if I can change out the banner so we can have your names there. Wait. Okay, just so everybody can keep track. Okay, so we're going to be talking about really gold. I mean, gold is heating up right now. And one of the things that I'm looking for with kind of with the Wall Street Reporter platform is I think gold is going to do quite well in the coming months, year or so, and I want to see this as an opportunity for investors to kind of what is the best way for them to get positioned, the right types of stocks, whether it's explorers, producers, what have you. And I think it would be interesting to have kind of like, everybody's take here. And Alex, you've been in this space for, a long time. And in of course, every aspect of the resource sector.
Mm-hmm. And what I like here is one of the things we want to see is our fundamental macro influencers, and right now gold is positioned as well as it's ever been positioned. What we saw in 2020, the stimulus packages, the pandemic, economic chaos. Unfortunately, these are the types of things that give gold a chance to shine. And that's what happened in 2020. We saw record prices. And amazingly, what I think is moving into 2021, all of those things that contributed to that record price in 2020 are still very much on the table, if not more so. Yes, there's a vaccine coming. That rollout's going to take some time, but I think the economic impact of the pandemic on a global scale is still, the true effects of that are yet to be really felt. And I think we're going to see that at moving into 2021. And then we've got stimulus and money printing and those types of things that also help the metal price.
Okay. Matt, let me ask you just right off the bat, what's your price target on gold?
That's a great question. I think it's going to be considerably higher than it is today. I have to agree 100% with Alex. I mean, when you look at what's going on, not just in the States, but around the world, we are in economic trouble. The only way out is stimulus. The only way to create stimulus right now is to get money in the hands of the population. So as you print more money, you basically increase the value of stuff that resists inflation, like real estate, like gold. And so, I was kind of surprised to see gold break out as high as it did this year. I mean, it broke over $2,000 an ounce. The previous high in 2011, was $1,900 an ounce, I think. So we set an all-time high. It's come off a bit. We're still up 20% on the year, but I think you have 20, 25, 30% more to go in 2021 or more. It's really going to depend on how much stimulus, it takes to get us out of this economic trouble. And, we have a Fed here in the States that is basically fanning the flames of inflation. They're just standing around with barrels of gasoline and matches trying to get inflation to roll. And if they do it, gold prices could go well above that. I mean, it went from $1,500 an ounce to $2,000 an ounce this year. It could do that again next year. I mean, we could see another $500, $1,000 an ounce next year, easily.
Okay, because I was I've had guests on before, and before we were saying, I'll give you kind of some perspective. Like I think back, this is a while back. In 2005, I think Alex, we were talking about this. In 2005, I was speaking with a former, gold guru. This is again 2006 maybe, and I said, hey, I think gold is going to be, $1,000 an ounce. And he said, oh, you're crazy. And I think at the time it was like 400, or it was really down and out. And sure enough, I mean, now I think gold could be 3,500 easy, maybe even 5,000. Why can't gold be 5,000? Is there any reason why it can't be $5,000, Matt?
No, I mean, we've seen this with commodities. They when they get fire, they often exceed our wildest dreams. But if gold hits $5,000 an ounce, that implies a lot of other things that are ugly in our daily lives.
I've heard that. I think we had another guru on. He says, "Oh, gold can go to 5,000. I don't want to live in a world with $5,000 gold." It could be just. How about Bitcoin? Bitcoin is 20 new highs, or 23,000.
It is.
Is anybody saying, "Oh, I don't want to live in a world of $50,000 Bitcoin"? Why are people they're looking at Bitcoin instead of gold? I mean, I think gold is much more, it's been around forever. I mean, literally forever. Bitcoin is, again, I think Bitcoin will do well. I don't trust it. It's just.
Yeah, and there's a lot not to trust. It's a market that's essentially unregulated, runs 24/7, and who knows what. The one thing that I've always come back to with gold is it truly spans cultures, it spans geography, it spans time, and it needs very little, if any, explanation whatsoever. Try telling someone a little older than the three of us what Bitcoin is, and you may struggle. But if you mention gold, I can show up anywhere on the planet, not speak the language, and put gold on a table. And I'm communicating right there. It's easy to do. It's easy to understand, and it's always something that's in our favor.
Interesting. Yeah, that's true. Yeah. Gold talks. Matt. So you're really the geologist, gold market expert here. What is if let's say we're saying the gold will be, let's just say 2,500, because even if it hits 20, I think 2,500 is that inflection point. We don't have to talk about once gold 25, all of a sudden that's a new milestone. That level becomes psychologically, when people see 2,500, all of a sudden that's like Bitcoin the first time it went to 10,000. It's the same. Mm-hmm. It'll be the same type of thing. So the question is, Matt, based on your experience, what is the best way for investors to participate in what could be a massive, gold bull market, or even just a 20% move here?
So I kind of look at this market in two different ways. I look at the physical metal as insurance, because, you're absolutely right. Gold could go to $5,000 an ounce. And if it does, that means that my dollars aren't going to be worth much anymore. So I hold physical gold. I own physical gold as a kind of a hedge against bad behavior in the currency markets. So if things really do go wrong, if we do get double-digit inflation like they saw in the 80s, I want to have gold as a fallback. But I really like speculating on gold miners. So earlier in the year, I was speculating on the large caps because they were producing gold, and so their exposure to kind of the rising gold price, these guys they were beaten down. From 2011 to 2016, gold miners were absolutely obliterated. So a lot of them went away. So they got used to producing gold at about $1,200 an ounce. So as you moved the gold price up to $1,500 an ounce, to $1,800 an ounce, most of that extra value went straight to their bottom line. So I'll give you a statistic. There's a little producer called Go Gold, and their net profit went up like 490% this year. So that's a lot of value creation. Because remember, gold miners are price takers. Like Apple goes out and they say, how much are we going to price the next iPhone? And they, $1,200. But gold miners every day, they produce gold. They got to check the spot price and see how much money they're going to get for what they produce. So those incremental movements higher in the gold price typically translate to incremental increases right at the profit line. And that's tremendous. So that's how I like to play the big guys. But the thing is, these guys are producing gold. They've been producing gold from the same mines since probably before the peak in 2011, because there was no money to invest in new mines. So now you got to go down the food chain. And this is where kind of the mid-tier and the exploration companies come in, because they need new gold mines, because mining is like, it's like making sandwiches, right? You only make as many sandwiches as you have rolls in the back. And when you run out of rolls, your business is done. Mining is the same way. So we need to keep finding new high quality gold mines to keep producing the gold. So there's a whole food chain there. I think you can do well in the big guys in the beginning. And I think you can do really, really, you talk about 10 baggers and 100 baggers. In the juniors and the explorers, that's really where the fun stuff is.
Yeah. Okay, so basically, so the miners, they have, obviously they have leverage to the rising price. They're going to do well, but it seems like, again, like, Matt, like you're saying, like the action is with the explorers, the junior miners. What and again, this is something I keep hearing over and over. It seems to be like an accepted. I think a lot of new investors when they're new to gold, they are They didn't buy gold stocks before. The first thing they look at is the producers, the miners. Right. But so you need to explain, again, because we're probably going to have a lot of new people watching this, why the explorers, the juniors, as they're called, is the better bet with the more upside leverage.
There's more risk there too. All right. So just to understand as you work your way down, but a good comparison would be like a drug makers or junior tech companies, where you take an idea, or you take an intellectual concept, and then you turn it into actual value. And that to me is the most appealing thing in the natural resources. My degree is in geology, but I spent most of my time in oil. I was training to be an oil and gas geo. And oil and gas, it's a binary question. You have a geologic idea, you take a drill bit, you put it in the ground, you either get oil out of the ground or you don't, right? Gold and metal mining is the same thing. It's a little slower, Oil's for the guys with ADD, right? Gold miners are for those folks, a little more patience. Right. It takes a little more time to figure out if you actually have something. But I'll give you an example, and I'm going to talk my book a little bit because I'm a shareholder in Cross Rivers. But their technical team, Rob Carpenter, he's a PhD geologist, and I knew him way back in 2006. He had a 6-cent gold stock, but he's a brilliant geologist, and he had this great idea. And what happened was, as he executed on this idea, that stock went from 6 cents until it got bought out by Goldcorp for $500 million at $2.62. So that's the sort of value, and the value is created simply by smart people doing their homework and then just creating wealth out of the ground. It's just such a great model. I love it.
Yeah, so it's very interesting. So well, it's basically it's the discovery. It's the discovery model, whether it's biotech,
exactly.
So what's interesting is, maybe for anybody that's new, you can explain to them like what happened with, again, using that as the maybe precursor or whatever that model. What happened with Rob Carpenter's? He had a stock. I mean, again, it was a junior explorer. I guess you could say similar to Cross River, or again, they're all relatively the same. But as he kind of got better results, did more drilling, all of a sudden people can see kind of the progress and the possibility. They can kind of see all of a sudden that the resource, that gold thing was is that fair to say? It kept expanding.
Yeah.
And then the market kind of extrapolated further, And if you get better results, they extrapolate even further, and the stock goes from a nickel to, I think, what, $2 you said it was bought out?
260. Yeah.
260. So that is that it's more than 100 bagger. It's no, it's not.
Yeah.
50 bagger. 50 bagger. Okay.
50 bagger. That's all right. And they got bought out.
How long did that take?
It took a few years. It
Okay.
took a few years. But remember this. So I wish I had a stock chart, but they were bought, so we don't have that chart anymore. But the in the market that they got bought out in, gold prices had already come down and the market was beaten up. That's the thing about resources, is they're very cyclical. And so when you have a tailwind, like we have right now with gold prices moving higher, people are paying attention. So these stocks actually get a chance to go up faster on good news. That's kind of the exciting thing that we have in front of us right now.
Yeah.
Let me just interject something there, Jack, because I think that's a good point that Matt makes. And we talk, and you and I spoke about my misadventures holding particular gold stocks and getting fatigued in them and not letting them do their thing. And a lot of investors make that mistake. And what we want to do here is remind people, make those placements now before the masses enter the market, because that's when you're going to see maximum lift. And upon good discovery results in a very if the metal price is 2,000, 2,500, suddenly there'll be 10 times the bid, 100 times the bid, and your opportunity to buy the stocks you're looking at today may not be under the same terms you're looking today. So you make that decision as to where you're going to go, and then get in. Don't wait for the masses, because now you're fighting with a million other people for the same thing.
Yeah. You mentioned Bitcoin before. Think about all those people I see on Twitter all the time. We've had multiple periods of Bitcoin fatigue, right? Where it's like, wow, I really don't understand I don't understand what's happening. And there's a whole lot of nail biting and hair pulling going on right now, because they all missed that big run. With these juniors, you have to be patient, because field seasons happen, and they go out, then they do their research, they do their exploration, they drill, then that material has to be sent off to a laboratory, then the results have to be okayed by a qualified person. And so it takes a while. But when the results come out, man, I mean, that's when it's fun. It looks like stair steps, Yeah.
No, it's like really essentially. Here's the thing. So a lot of our audiences kind of use these like tech stocks or something, which can they just move like kind of in a pattern. The thing is with the gold exploration space, you need a little bit of patience, because again, like you're saying, it does take a while for these things to play out. But when they do, it's really kind of these things are kind of binary bets. So either it's going to kind of hang around, or maybe it could go to zero, right? Or it could be 100 bagger or 50 bagger, and very quickly, so but you might have to wait, I don't know, 3, 4, 5 months, and then all of a sudden it's 10x, and whatever, 20x.
These things happen. They happen, and you really have to keep an eye on. That's why you have to set your criteria, what meets your requirements for a good investment in this space, and then make your move. And one of the things why I think Cross River, and of course I'm the guy who's going to be the guy to say this.
Yeah, of course.
But why I think Cross River meets those requirements is there's a few check boxes that we tick off. And we've been speaking about it here, is the technical team, as Matt says, led by Dr. Rob Carpenter. That's our tech team. Massive discoveries under their belts, geological success, corporate success. So they're a big part of what we're doing. In fact, they're the ones holding really the wheel of the ship, and we'll follow their leads. But we have a tight structure. We're an early stage public company. We're only into our 7th month, essentially 6th month of life. So we're still, we only got 22 million shares out, which is a really nice place to be. And then, where are we located? Where are we going to find the gold? We're in one of the best places on the planet to find large economic gold deposits. And we have size. We have district scale land packages, which means, if upon discovery, the majors will take a peek at us because we have scale. If your land package is too small, it's just not really worth the effort for them to take a peek at you. You need to have scale, you need to have size, because when and if you find what you're after, you're going to have to demonstrate the viability of size there. So important things to note.
Okay, so now, Alex, of course, you're going to say great things about Cross River, but I want to hear, from Matt. Matt, so what, you've seen a lot of gold stocks, you've seen a lot of resource stocks, in your career. What is it that attracted you to Cross River Ventures, CRVC?
I'll give you I have pretty simple criteria. I want to reduce as much external risk as I can, because, there's operational risk with these companies, right? As with biotech, as with all these guys, some of them fail just because they had a great idea. It just didn't work out, right? So I always start with the people, and I try to back people that have had success in the past, or that I know are really smart. So there's some young people that I've watched kind of work their way through from field geologist to VP of exploration, and now they're a CEO, or they're the head of a technical team. I want to start with people. I want to back really smart people, because in the juniors, you have some folks that are in it because this is their career and they want to make discoveries. And there are some people that are in it because during the bull markets, you can live a really nice lifestyle. And I don't want to back the lifestyle companies. So I find those technical teams. The second thing I'm looking for are the rocks. And that's kind of where my geologic background comes in. If you dropped a quarter in an alley, but it's too dark back there, so you're out here looking for the quarter where there's light shining, you're never going to find your quarter, right? Or if you're going to hunt elephants, you're not going to Brooklyn to hunt elephants unless it's in a zoo. You got to go where the elephants are. And so I want to see these companies going in places where there's a track record of discovery and there's a track record of mines, because there's a lot of folks looking in places that are really exciting, but you can't build a mine there. I'll give you an example, and this is oil and gas, but years ago I went to see an oil and gas project. It was ridiculous. They had made this discovery. They're actually in the Guinness Book of World Records for how high their flow test was, but it was in the jungle in New Guinea. So I had to fly in a big fixed wing out to this airstrip, get in a helicopter to fly out to the well site. You weren't going to lay a pipe out there. It was crazy. So you have to have a place where we know we can build a mine. We know there's a really high quality metal endowment in the rocks. And that, if you focus on those kinds of companies, great people, great rocks with the right kind of location to build a mine, then you've eliminated a lot of the risk that you can manage. And the rest of it is up to the company. And that's the risk you have to accept,
Okay, so one of the things, so essentially you have, Rob Carpenter, who's the head of the technical team at Cross River. So obviously you like his track record, but what about, so the actual project? Let's talk about kind of the project that Cross River has, like what makes this thing so special? And I think we're getting some questions coming in now about like, where are you going to start drilling first, all that stuff. So what is it about this specific, the project? We're talking about the Ontario one. I guess we're going to start with that, right? Kind of the main.
Yeah, well, let me throw this in there. Obviously, we have 28,000 hectares of land in northwestern Ontario. It's quite a sizable land package. A little over 11,500 hectares are tied into a consolidated land package called McVicker. McVicker was pieced out between different companies and privately held companies, and we've managed to put all those packages together. And so there's northwestern Ontario is dominated by greenstone belts. One of those greenstone belts is called the Lang Lake Belt, and McVicker now covers all of the structural elements of the entire belt. So that really gives us that footprint to make a discovery, an impactful discovery, much more so than say that oil discovery in New Guinea, right? So we're in the right place. We have the right size, and those are our positives. So McVicker is our focus. Certainly out of the gates here for 2021.
And let me put that a little more into context, Alex, because you're absolutely right. And greenstone belts are really important, and they're so important that most of the gold in Canada that's produced in Canada comes out of these rocks. Ontario produces, I think, 45% of all the gold produced in Canada. And if you track those kinds of rocks across into Quebec, they produce 75% of the gold produced out of Canada. So these are the right rocks. I mean, this is, if you're thinking about gold in the States, you're thinking about Nevada. You're thinking about the Carlin Trend, the Cortez Trend. These rocks are every bit as exciting as the ones in Nevada, except better. I was underground at a mine called Leeville a couple of years ago in Nevada, and the rocks are this sooty, crappy. You'd never know there was gold in it. They have to dig it up, pile it on these giant pool liners, and sprinkle water on top of it to leach the gold out. It's terrible. It's no fun to look at all. The rocks up here in Ontario, you can see the gold, baby. This is actually, the kind of stuff that you dream about in the quartz. So it's the right place to look for gold. It's really fantastic.
Okay. I like the Nevada. I like the Nevada or Nevada.
I'm going to get hate mail for that. I'm telling you.
The analogy. It's okay. Listen, one thing to note, Nevada has a much more robust history in terms of people mining in the gold rush in Nevada. We're probably 30, maybe 40 years behind in northwestern Ontario in terms of the amount of people, the amount of money that's flowed into that area. For example, everybody talks about Red Lake. Beyond Red Lake, the rest of those belts have not seen nearly the same amount of attention. So there's still a lot of deposits to be found. They haven't been pin-cushioned, as we say, and we're in a good spot to make that type of discovery simply because it hasn't had the attention that Nevada has.
So let's jump into some audience questions. Ross, was there any historic drilling on any sites that you plan to drill?
Yeah, absolutely. In McVicker, in the early 90s, BHP was doing some work, really cursory work over large land packages. In the late 90s, everybody left. These large multinationals left Canada. We had a Bre-X scandal that's a well-known historical issue in the history of mining in Canada, and the metal prices didn't help. But BHP did some drilling on McVicker, and we've got some really nice results from those historical drill results. 6 grams over 10 meters, and a couple of really high 30, 40, 50 meter or 30, 40, 50 gram per ton intercepts. The type of stuff you want to see is, as Rob says, you can't manufacture grade. So when you're seeing these high grade intercepts, that's also a really, really good precursor to what you're trying to do.
James is asking, which property do you plan on going to first, and what exploration technique will be used first to determine drill targets?
That's a great question, and Matt, you might want to jump in on this when I have my say here. But certainly McVicker is the focus, and one of the things they didn't have in the 90s when the bulk of the exploration was done on some of these projects was LiDAR technology, so laser-focused topographical imagery, basically a technique that gives you a good look at the folds, the breaks, and the fault lines that lie within your land packages. These are the areas that the gold deposition tends to accumulate, comes through the cracks. These mineralizing events eons ago would push the gold as a liquid, essentially, through these cracks. So you need to find these fault lines on your properties, and that's one quick, cheap way to do it, and very, very effective way to do it. And we're lucky because this technology just didn't exist in the late 90s.
Yeah, I can jump in a little bit more. Alex is absolutely right. These deposits are all about plumbing. So you have to understand that gold's emplaced by these hot fluids, and these rocks are really, really dense. So what you need to find are the cracks, the fault zones. And I was talking to Rob about this because it's, one of the things that you have to say about Ontario summers, black flies suck. They're everywhere. And so he was saying that some of these faults are so subtle at the surface that you'll be slapping a black fly and step right over it and miss it. It's very hard. A lot of this terrain is covered. And so flying LiDAR kind of peels back all the surface so that you have a really good understanding of the structure. And so it allows you to really focus your field work. And so that's the key. Surface mapping the structure, whether it's from these kind of remote techniques like LIDAR, geophysics, and then getting your geos out in the field, getting them dirty, collecting samples, then you guide your drilling in. And that really makes an effective series of techniques to figure out where the gold is.
I think it's important to note, Jack, also that when you get a team like Rob and the others, they know very much not just about where or how to find drill targets, but also how to avoid the mistakes a lot of other people make while doing that. So it's good to know that you get that with a team like Rob's team.
Okay, Ross is asking, he's been in some other mining place. There was talk of delays of the assay labs. Do you see this as an issue?
Well, no. I mean, delays are, what are we talking about? 3 weeks to 6 weeks? I mean, they're not really anything, that's going to slow down anything to a great degree. I think lab results tend to be like the last, when you're an investor waiting for a drill result, it's the last 5 minutes of your day in high school, where you're staring at the clock and the last 5 minutes take, 45 minutes. That's really what it is when we're talking about delay. But honestly, no. There's plenty of labs in Ontario, and we have no issue, anticipate any issues or backlog.
Okay, so James is asking, how are you doing with the financing? You got the financing going on. Is there a fair amount of interest in closing?
Yes.
The placement? Yes,
there is. It's really a bad time of the year to do. What are we, a week away from Christmas?
Mm-hmm.
So it's taking a while to close, and we'd like to get it done here over the next week. But that's really money for Q1, Q2, Q3, and that's Rob's LIDAR money. Let's just be honest about it. He'll use that money to fly the surveys over the priority target areas early in 2021, and we're going to have to raise more money in 2021 to give Rob a drill budget, and that's what that's a good thing. When Rob says, "Okay, I need $4 million for drilling," we're going to be real happy because we know the targets have been picked, and we're excited. We'll be excited to get to the next stage of company growth.
So let's kind of wrap up. I'm gonna actually ask our usual question. I'm going to ask Matt, which is, Matt, in your opinion, right? I mean, you're gold stock guru. What were the top 3 reasons? What attracted you to Cross River Ventures? What do you like about the stock now?
Yeah, I think that, as I said, I typically start with the people. And, Rob and I have kept in touch for years and years. So Rob stepped away after being the CEO of Kaminak. He actually taught a class at a university on mineral deposits. And so we just happened to reconnect not that long ago. And he mentioned that he was going to work with Cross Rivers. And so I called him up and said, tell me, give me the pitch, because I'm interested. And it was that combination of Rob and the technical team, and the rocks are compelling. I mean, they really are. If you're going to take shots on goal, you might as well be as close to the goal as you can possibly get. And that's really what this is about. And the land package that they were able to put together. I mean, I think Alex may have understated the value of taking a whole greenstone belt. It's just crazy. And so this is a tiny company. By the time I started talking to Rob, most of the gold stocks that I was familiar with were already up 80, 90, 100%. So when I looked at the market cap of Cross Rivers and the people and the rocks, it was one of those, I think I just hit the lottery. That was where I was in my head. So that's the answer.
So basically you're saying it's undervalued right now, based on the current, without even further drilling. I mean, right now, would you say it's
undervalued? I would say that your price to risk is fantastic, right? Because all these guys they all have that risk associated with them. But a lot of them, the prices have come up because people are excited about the rising gold price. We don't have that in Cross Rivers because they've just begun. And so I would say, in terms of the amount of risk I'm taking for the money I'm risking, it's perfect. It's perfect for me. It's the right setup.
Yeah, I mean that's the thing. Our kind of philosophy is always it's that kind of risk reward proposition. It's that, and we look. Yeah, I mean, I like things which have that asymmetric, risk reward situation. So okay, so Alex, what do we have? What do we have in terms of news flow? What can we expect next couple of weeks? And what's the reason why investors should want to own Cross River right now?
Yeah, well, it's quiet time in terms of actual work on the properties. They're in the technical team is continuing their due diligence, their technical reports. They're going through all of the information, historic information, and there's loads of it from different sources. So that's all taking place. We'd like to close the placement off here, by the end of. We've got a few weeks here to do it, but technically, I think probably within the next week. And then it'll be the news flow will center around the geophysical surveys that we'll do in Q1 and Q2, and target generation. One thing that we want to do is build a bank account of target inventory. And the more you have in terms of target inventory, the better. So we've got a lot of areas to explore, a lot of areas to drill within these land packages. At McVicker, we expect that to be quite large. So we're going to be getting to that target inventory, and then progressing towards a drill program in the warmer months. And I mean, for some people, that seems like the last 5 minutes of your grade 11 or your 11th grade history class. But don't make the mistake of getting out too early. It's far less an exercise to sit and hold a good explorer than it is to chase it. Suddenly you wake up, gold's up $100. There's the prices have all moved on all of the stocks you were looking at, and you missed your entry point. Not to say that other entry points aren't good, but if every penny counts, if every dollar you place into one of these deals counts, then you want to make sure that your entry point is the best, and that's where we're at today.
Okay, so the bank of targets, that's the key thing to watch as this portfolio of targets grows.
Right.
Okay, exciting. Okay, guys, thank you very much. We'll look forward to having all of you back. Alex, Matt, thank you everybody for joining today's live stream, and we will see you on the next one.
Okay, take care. Thanks.